Hey, what's up, guys? Welcome to AzesEco. How are you doing today? Today I'm pretty good. And then today we're gonna talk about the Black Monday in 1987, one of the most important historical event in the global economy. So before that, I would say that if we forget the past, there will be no future. Says the one of the most Korean famous and influential historian. So which means I think in the investment and global economy, a lot of things happen once again and repeat over and over and again. So to deal with what's gonna happen in the future, we should understand all of the past, and then we should make a analysis, and then we can make a wise decision about it. So I think understanding that this kind of quite famous historical financial event is really really important. So I would like to give you guys this kind of high quality information about the quite famous and influential historical things. So the first one is the Black Monday in 1987. So let's talk about it. Black Monday is 22.6% drop in a day in 1987, October 19 on Monday. So it's quite significant one day drop in Dow Jones Industrial Average history ever. So let's talk about the background situation. Before the Black Monday broke out, what happened around the U.S. and global economy. So first one is U.S. economic growth from 1982 to 1984, constantly increasing the growth rate in GDP in the U.S. As you can see here in the chart, let's see. In 1982, it hit its low point of the GDP growth. Its minus area around minus 5 point something, and then after then it bounced back, and then in 1984 it was in the plus area. It's about 7 or 8% GDP growth. So which means at that time the US economic situation was pretty good, and then it was getting better. And then the second one is interest rate kept lowering. As you can see here in the graph, oh, let me tell you about this first. This graph and chart I use in video is from the tradingeconomics.com. So I think it's quite reliable and then confidential, reliable, and then the convincing data. So I'm gonna use it in my YouTube channel. So let's see. The U.S. states federal funds rate. It hit its all-time high in 1980 because of the stagnation at that time. After 1980, the U.S. government kept lowering the interest rate. So it hits its lowest point in 1987 when Black Monday broke out. So yes, so which means a great amount of dollar came into the asset market, not only real estate but also stock and bond and security markets, maybe definitely in the commodity market as well. So and then third one is Plaza Accord, which happened in 1985. Yeah, right, 1985. And then which means the US dollar was depreciated by 50% against Japanese yen in 1985 and to 1987. It reduced the US trade deficit, and then it's quite important historical event in global economy. So I'm gonna cover the Plaza Accord on my next video. So please stay tuned. Yes, and then as you can see here in the graph, you can see the U.S. states balance of trade hit its lowest point in 1986, which is right after the Plaza Accord. and then after that it bounced back, and then finally in the 1990 it's around minus 4,000 something around then. And then which this graph shows that U.S. trade deficit was reduced constantly because of the depreciated dollar. So, and then in 1987, August 25th, Dow Jones Industrial Average hit its all-time high, 2,722.42 point. So it was quite skyrocketed. Then compared to the beginning of the 1987, it was the 40% gain. It's a significant figure, right? Then now let's talk about the reason why it collapsed in a day, why the market collapsed in a day. 22.6% decline in a day. So I think there are three reasons. The first one is the high stock prices, then over evaluated market, which means asset inflation. As I showed you before in this chart, you can see the interest rate in the US government was kept lowering, stay lower. I'm sorry, the US government kept lowering the interest rate since, since 1980. And then the great amount of dollars flowed into asset market, just not only real estate, but also security markets and some commodity markets. And then some people say, we all know that sometimes the inflation could be exported. So at that time, a great amount of dollar, which means inflation, was exported to the global economy, global market, a lot of foreign countries. So in the end, it makes the the financial crisis bigger and bigger. So because a lot of countries in the global economy are intertwined with each other. So in a country, especially in a big country, when financial crisis broke out, it spread out all over the world. So finally, it turns out of the financial crisis of the global economy. And then the next one is the worry about the U.S. interest rate hike. As I showed you before, after 1980s, the U.S. government interest rate kept lowering till 1987. So people and institutional investors and individual investors felt like something's going wrong because a great amount of asset inflations are in assets. The price of the stocks and stocks and real estate is over evaluated. So feels like the bubble burst sooner or later. So they're just worried about it. So it's kind of psychological things. And then the third one is a lot of professional analysts and economists say this is the most convincing evidence. This is trading program. Because of the development of the IT technology and computer at that time in Wall Street, they usually use the trading program. Let me tell you how it works, the process of the trading program. If the investors selling in future market, I should tell you guys this one first. Then in the asset trading, there are future market and then the spot market. So if selling in the future market, it breaks the balance price between the future and spot market. And then the next arbitrage happens, which means selling the spot market and buying the future market. Selling the spot, buying the future. And then the price down in the spot market so rapidly. And then next, the additional sell in future market, which is accelerating the price drop so rapidly. So a lot of people think this is the most convincing evidence, and then so do I, because 22.6% one day drop is so significant figure actually. And then without any technical problem or technical dysfunction, it could not happen. The At that time, definitely the America was the largest stock market in the world. Then so one day 22.6% drop could not be imagined at that time as well. So I think it was the beginning of using trading program, using computer program at that time. So they were not good at managing the risk of the software or a trading program. So I think, yeah, as well. So do I. The most convincing evidence is the trading program. So now let's talk about the effect in global market. So actually, as I mentioned before, Black Monday was the largest one-day percent decline in Dow Jones Industry average in history. So it's quite significant, 22.6%. And then by the end of October in 1987, we could see a great amount of decline in global economy. In Hong Kong, 45.5%. In Australia, 41.8%. In Spain, 31%. UK 26.45%, and then in the US 22.68%, significant drop happened. So today we just covered the Black Monday, the background situation of it, and then why it happened, the three reasons why it could happen. So it's quite interesting for me to learning and studying the historical financial events in the world. So yeah, so it's quite interesting. So as I mentioned in the video, next time I'm gonna cover the Plaza Accord exclusively, the background situation and why it happened and its effect, and then why it has to do with the lost decade of the Japan. So everything's are connected with each other, so it's really important matter. So please stay tuned. If you like my video, please give me a thumbs up and subscribe my channel, please. I will see you later, guys. Bye.